A sovereign wealth fund is a state-owned investment fund composed of money generated by the government, often derived from a country's surplus reserves, such as, say, oil revenues in Saudi Arabia. These institutions have tremendous financial power and influence. To put it in perspective, assets under management at the largest funds represent as much as twice the GDP of their respective countries. The first ever sovereign wealth fund was established in 1953, right here in the GCC, the Kuwait Investment Authority. Javier Herrera from Kearney explains the region's sovereign wealth fund dominance.
Every country in the GCC has at least one sovereign wealth fund. Today, there are more than 100 sovereign wealth funds out there, and they hold more than $11 trillion in assets under management. 40% of those assets are here in the region. Today, if you look at the top 10 sovereign wealth funds in terms of assets under management, 4 out of those 10 are in the region. If you look at the top 20, 9 out of those are here.
Now, sovereign wealth funds typically have two objectives: financial returns and economic development. Herrera explains how this works.
In Saudi, the Public Investment Fund, which is the sovereign wealth fund of Saudi, today has $650 billion in assets under management and close to 2,000 employees. In the automotive sector, 2-3 years ago, there was almost no presence of local players in the automotive sector. The PIF took the lead role of catalyzing the sector. They did so by making 2 very strategic anchor investments. One was Lucid, the other one was Sear. After they made those 2 investments, they started generating the anchor demand. From that anchor demand, new opportunities resulted within the value chain of the automotive sector, for the private sector to make new investments and for other players to come and participate. That is how they are not just making investments for the sake of financial returns, but also to develop and advance their economies.
Now, there are a lot of similarities in the way that sovereign wealth funds in the region operate. Number 1 is growth. Most, if not all, sovereign wealth funds have seen their assets under management grow by at least 20% year on year for the last 4 to 5 years. Second, the priority sectors for the funds in the region are healthcare, renewables, and manufacturing. And finally, they're all looking to be a catalyst for collaboration with the private sector. And then there are some similar challenges they face too.
In the region, we believe there are 3 main challenges that they need to keep in mind. The first one is navigating global disruptions. And because of their size, they need to be agile. They need to be able to transform themselves at the right pace to be able to remain ahead of the curve. The second challenge we see is attracting and retaining the right capabilities in order to deliver these ambitious mandates. And the third one that we see is making sure they don't rush into making investment decisions because they want to accelerate capital deployment, because they want to accelerate economic development at the expense of not making the right investments.
With fluctuating global inflation and hydrocarbon prices, as well as the ripple effects associated with the regional conflicts, sovereign wealth funds would need to evolve and expand their sources of capital.
Today, the capital of the sovereign wealth funds, it's limited. They are having surpluses from the oil and gas industry, but at the same time, we are seeing how they are looking at other sources of capital. Example number 1, debt issuances. We are seeing, for example, in Saudi Arabia, the Public Investment Fund, between 2022 and 2023, they issued $8 billion on green bonds. These issuances were very well received by the market. In fact, they were oversubscribed by more than 6 times. Another source of capital that they are tapping, for example, in the UAE, are IPOs. We are seeing a booming in terms of IPOs. The third source of capital that we're seeing is the transfer of government assets. For example, earlier this year, we saw the transfer of 4% of Saudi Aramco into Sanabil. Sanabil is a PIF-owned investment fund that focuses on investing in early-stage companies. Investing and giving them more firepower will allow Sanabil to then have a multiplier effect.